Are you freezing in Alaska?
Hi, everybody. Thank you for joining in. It's Amanda Brewton with Medicare Answers Now. And today we are talking about the Inflation Reduction Act, part two, with a little bit more clarity as to how the payment plan works and how the changes with for the Part D, specifically for the Inflation Reduction Act, affect seniors. Today I have with us Samantha George, who is been amazing with paying attention and the know on all of the rules, the regs, and the carriers, and how things are actually being implemented. We thought that it was a good idea to do this webinar now that we are into the after the first of the year, and these new changes regarding the $2,000 cap are implemented, right? So with that, we are going to spend a little bit of time. This is being recorded. It will be out on my YouTube channel, which, if you are not familiar, is Insurance Unfiltered with Amanda Brewton. So by all means, like, follow, subscribe, share it. That is definitely a way to stay up on all the things. And we are getting ready for CapCon, which is at the end of February, and super excited. We have, as of yesterday, we have over 620 some odd people that are attending from, actually, those are agents. So 620 some odd agents from all over the country that will be on Capitol Hill, talking to legislators about what we do, what we think about things like the Inflation Reduction Act, and some of the changes that need to be happening. So, with that, if you have questions, by all means, throw them in the chat. Both Sam and myself will be watching that. And you can also use the Q&A, but we do want this interactive so that we can answer your questions as we roll through. So with that, floor is all yours, Sam.
Thank you, Amanda. I really appreciate the opportunity to come on and just talk to everybody. That's been my biggest mission, is just to get the information out there to the masses so that people can help their clients, because so many people are experiencing confusion, pushback. The carriers don't know what's going on. They call into the carrier. The customer service rep on the phone goes, "What are you
What are
talking
you
about?
talking about? Yes.
I have no idea what you mean. I don't know
Yep.
what that is." So I
Before you get
really,
into this, though, and I don't mean to cut you off,
no,
but
go
let's
right
go
ahead.
ahead, and because you are actually new to tag teaming webinars and stuff with me, can you do a quick little bio about your background so
Yes,
that they know why
absolutely.
they need to pay attention to you and listen to what it is that you say, not just because I'm telling them they need to?
Absolutely. And full disclosure too, here, I accidentally realized that I fat fingered my bio to you, and I have over 22 years of experience. So I want
There we
to
go.
clarify that. That was my boo-boo. I don't
Awesome.
want to overinflate by another year, but so I've been in the industry, in the healthcare industry as a whole, for over 22 years now. 14 of that specifically has been spent in Medicare. I actually started on the carrier side, on the health services organization side. I worked for Humana for 11 years. I was an agent in Central Florida for 6 of those. And then for the rest of them, almost six, I spent up in Washington State, leading that market as the market manager for Humana, and then transitioned over into the FMO world. And I've been here for the last 2 years. It's been a wonderful, eye-opening experience to be on this side of the fence. But I have kind of a really multifaceted background. I do a lot with compliance. I read all the regs, interpret Medicare policy for our FMO, and I love Medicare. Like, I just adore everything to do with it. I literally sleep and I'm dreaming about Medicare. So this is a day and night thing for me. I am one of those super
You're an
nerds.
insurance geek like me.
Super
Yes.
nerd. Yes. I put so there's an app called Natural Reader, and I love this because I take the regs, I take all those PDF docs,
Mhm.
load them into this Natural Reader app, and it reads it to you from AI in a natural voice, just like it's an audible. So I listen to it while I'm driving, while I'm walking, while I'm doing
That
dishes,
could be dangerous for me. Oh God. Okay.
everything. Yeah. So if you ever want to get nerdy with it, that's the way to go. But
Totally.
yeah. So that's my background. I absolutely love this industry. I love seniors. I love agents. I love making sure that agents have everything that they need, and the education is absolutely the most important part of it. So I'm going to go ahead and share my screen, get that all up and running, and talk about the Medicare prescription payment plan. I'm going to do a little bit, just a high overview of the Inflation Reduction Act, because I know many of you are very familiar already with all of the ins and outs of the changes. But just because this all is so interwoven, this is the agenda. Going to run down the IRA, benefit design and troop changes, and how that intertwines with the Medicare prescription payment plan, all those unintended consequences of the Inflation Reduction Act, go through the particulars of the Medicare prescription payment plan, what it means for you and your client, and what you can do. So the IRA as a whole was a law that was passed back in 2022 that had different implementation phases throughout. Some of those we are already, we've already been experiencing. We have got the limitation of the $35 on insulin, the limitation on the base beneficiary premium to 6% year over year. Now that's just a limitation on the base beneficiary premium, not all premiums as a whole, as to them being able to increase 6% year over year. We've got the $2,000 troop, that out-of-pocket limitation that came into play for this year. We've got the elimination of the coverage gap that happened this year as well, lowering prescription costs with certain vaccines that went no cost back in 23, negotiation on certain drug costs it went into effect now. They've done all of that first round of the 10 drugs for negotiation, and they've released the next series of drugs that they're doing for negotiation, both for 2026 and 2027. The implementation of those price limits doesn't start until next year. And the expansion of financial assistance, where they raised the full extra help income limit to 150% of federal poverty level. That's an important point this year because a lot of beneficiaries qualify but don't know they're eligible. So having that conversation, super important right now to make sure that everybody is getting the help that they need. Got tough times, things going on, a lot of people struggling to afford their prescriptions. They may qualify for LIS and not even know it. That's part of the reason why CMS was striving to implement the requirement for agents to actually dig in and discuss LIS eligibility in greater depth in that 2026 proposed rule that's out there right now. So this is the defined standard. And we talk about defined standard, we mean what Medicare says a Part D plan has to have. This as the base level entry marker for what is considered a Part D plan that also ties to what is considered creditable coverage. So for this new change in 2025, this is the new definition of a Part D plan. You've got your deductible phase with a limit of a $590 deductible. You go into the initial coverage phase thereafter, where the enrollee pays up to 25% coinsurance for covered Part D drugs, sponsors 65 to 75, depending upon whether or not it is a brand name applicable drug for that manufacturer's discount, in which they pay 10% of that cost. Now, once the beneficiary's out-of-pocket costs have come to $2,000, that troop, or any costs that qualify as incurred and that are paid on behalf of the beneficiary, are reimbursed by the plan on behalf of the beneficiary, go towards that $2,000 troop. And then they're in that catastrophic phase where they have no additional costs for the remainder of the year. You see in the catastrophic phase now that where the carrier, the Part D plan, had a lower responsibility in the catastrophic phase, they are now having a stronger responsibility in the catastrophic phase, which means even more cost implications for the carrier aside from just that $2,000 troop. So with Part D plan design, now this counts for MAPD and PDP, as well as EGWP plans. You've got your different plan design types. So the one that we looked at on the last screen was the base level. That's your base model Part D plan. You can also have basic alternative plans where it has some variation thereof. and you can have what's called an actuarial equivalent. They are all underneath that same umbrella and governance as the standard, the defined standard, that basic design. Then we get into what is called an enhanced alternative benefit design plan. We'll often see it referred to as EA. This is where there's supplemental drug plan benefits that exceed the defined standards. They're giving you more. They're giving you more than the base model car. So that includes situations where the plan is covering drugs that are specifically excluded from a Part D drug coverage. This could be vitamins that are included. This could be your ED drugs. Those would be part of an enhanced alternative benefit design. There's also reduction of cost sharing in the initial coverage phase. So your tiered structure where you're paying maybe zero copay in tiers 1 and 2, you've got flat copays in tiers 3 and 4. That is part of enhanced alternative design. Then you've also got situations where there's a reduced or eliminated deductible, or maybe the deductible only applies to certain tiers. That's also part of an enhanced alternative benefit design. Now, why is this important for 2025? It's because in part of the interpretation of the IRA from CMS, so when CMS interpreted this, they considered the greater between what's provided with the enhanced alternative versus what they would have paid with that defined standard cost share, that 25%, that $590 deductible. They count the difference towards troop. It's considered to be reimbursed by the plan. This also applies to EGWP plans as well. So those employer group waiver plans, they're your retiree group MAPD coverage. It counts for them too. So this has strong implications in the cost that the beneficiary experiences out of their own pocket. So the example of how this works is you might have an actual drug cost of $400. The defined standard says that they should have paid $100 because that's 25%, but the plan copay is only $40. The $100 is actually what counts towards their troop because it's the greater. So if their defined standard would have been greater, that's what counts towards the troop. This is why you are seeing people on Ozempic, Eliquis, other high-end prescriptions that are meeting their troop while only paying maybe $400 out of their own pocket for the entire year. And now they're in catastrophic coverage. This is why. So it also does include the deductible phase. That factors in. So if they're not paying that deductible, that still counts towards their troop. So that's a big deal. And that is why you're seeing very strong implications and these consequences that are playing out in your Part D availability. That's why we're seeing more plans that are following defined standard, that have the $590 deductible, that have high coinsurances versus, your flat cost shares, your flat copay cost shares. So this is a big part of it. The reason that they are having to feel as though they need to take those measures because there's such high cost implications. So now we're getting into the section on the Medicare prescription payment plan. And this is brought about by the changes from the Inflation Reduction Act. This is part of the law. So many names, it's the same program. If you hear it referred to as the Medicare prescription payment plan, you hear it referred to as the smoothing provision, as Part D smoothing, as MPPP, as M3P. Now, CMS said specifically earlier this year, they had issued an advisory that said, we are only referring to this as the Medicare prescription payment plan. We will accept no substitutes. So they will not be referring to it by any other name than the Medicare prescription payment plan. But you'll also hear it referred to as the program, the payment plan, all of these types of things. It is the Medicare prescription payment plan. They are one and the same. So with this, the Medicare prescription payment plan starting this year, it is a legal requirement for carriers to offer their enrollees the ability to spread their prescription costs throughout the year. It's a January 1st to December 31st spread. And instead of paying at the pharmacy counter, they pay in the form of capped monthly payments in a bill that comes from the carrier. Any Part D enrollee is eligible. It doesn't matter if they have a standalone PDP plan or an MAPD plan. So for the Medicare prescription payment plan, first and foremost, it is an installment plan. It is an agreement with the enrollee's Part D sponsor, so their carrier, to finance their prescription drug costs at no additional cost and have their costs be billed to them in a monthly statement. So the thing that I've advised is that an opt-in agreement, so when they call in to opt into this payment plan, it's akin to filing a promissory note, to signing a promissory note. They're verbally attesting or signing their name saying that I will pay back this amount due. So that's an important thing for them to remember that they do owe that amount. Now, when we say no interest financing, it's an installment plan. There is no interest, there's no fees, there's no penalties, there's nothing that can be added to their M3P balance, including overdraft fees. So even if they have a check balance, they can't put those NFT fees back on their M3P balance. All pharmacies are included, every single one. It doesn't matter if it's retail, mail order, specialty, home infusion, or long-term care. They are all part of the Medicare prescription payment plan and required to participate. The plan started, so it actually launched on January the 1st. That's when the program began. But beneficiaries could actually start opting in back on October the 15th at the start of AEP. That's when beneficiaries can opt in for the following calendar year. So for instance, next year, if they are making a plan change and they want to opt in on their new plan, they can do so and write into their new plan for that January 1st effective date. Their Part D enrollment has to be validated, so it's got to be accreted, so processed and approved through CMS before they can opt into the Medicare prescription payment plan. They can opt in prior or during the plan year. So they can do either. And it's at any point. They can only do it at certain periods. They can do it at any time throughout this year. So when they do opt in, what is going to happen? They are going to pay zero at the pharmacy counter. They're not going to experience any cost share payment for their covered Part D drugs at the pharmacy counter. So I want to express that covered Part D drugs. If it is not a covered drug or if it is an excluded drug, it will render a code back to the pharmacist that says this drug cannot be applied to the Medicare prescription payment plan. And then they will need to pay at the pharmacy counter. So if you have some questions or concerns from your clients that come back that says, I opted into this, and then all of a sudden I had to pay for a drug at the pharmacy counter, it's likely because it's an excluded drug or not a covered drug. So once opted in, again, they can't pick and choose though. They are opt in or opt out. It is all or nothing. So once they opt in, all their covered Part D drugs are going to be processed through the Medicare prescription payment plan. It takes over. It's almost like a rider. If you think of like an LIS rider, it's almost like a rider where it just latches onto the plan and that's what is going to take effect. It does process though with the pharmacy like a secondary insurance. So we'll get to that in a little bit later on. When it processes through, it processes first with the original plan details, then any secondary insurances, any coordination of benefits, and finally it processes with the Medicare prescription payment plan information. So instead of paying at that pharmacy counter, they're going to receive a monthly bill that's going to come from their Part D plan. It is going to be a separate bill from any PDP or MAPD premium. So if they're receiving a coupon book, if they're getting a statement, it's going to be a separate bill. Yes, they can set up auto pay. Yes, they can do all those things, but they need to know these are two separate payments. So making sure that they're aware of that and also making sure that they're aware that this monthly maximum cap, this bill that they receive, it's going to vary. It's typically going to vary. Sometimes it can vary wildly, or sometimes it can vary just a little fluctuation. It all depends on when they're filling their prescriptions and how much their prescriptions are as to what that monthly maximum cap is going to look like. The formula to determine their payment is calculated on a monthly basis. So how can they opt into this program? They have to choose to opt in. There's no auto opt-in process, at least for the initial process at this moment. Now, on the 2023 proposed rule, CMS is proposing an auto re-enrollment for the beneficiary. If they maintain their enrollment in the same exact plan, they would be able to just roll over into the plan again the following year. But for the initial decision to elect to opt into the M3P, they have to make the decision and call in. So it's got to either be them or their representative that has that ability to do so for them. So they've got to contact their Part D plan. CMS requires that the carrier offer three modes of opt-in: paper form, by phone, through a toll-free number, or online. They have to offer those three options. The web form should be accessible directly on their website, and it shouldn't require them to log into a portal in order to complete that. So how long, once they do the opt-in, how long do they have to process those requests? If they're doing it prior to the plan year for the start of January the 1st, they have 10 days to process it. If it is any point during this year, during the calendar year, they have 24 hours to effectuate that opt-in. And the Part D enrollee has to be notified by the carrier within that 24-hour time frame that their opt-in request has been processed and approved. We shouldn't really be seeing any denials of opt-in at this time because there aren't people who have defaulted yet. So they have to notify of effectuation. So yes, you're good to go, or denial within the 24 hours. But again, we are just at the beginning of the program, at the beginning of the year. So we shouldn't be seeing defaults yet. And that would be the only reason for denials. So these required notices are also going to be a factor in all of the communications that are coming. Every single Part D enrollee was required to receive a program notice and an opt-in election request form from their carrier. The requirement was for them to send the notice and the form at the same time frame that they're sending out their ID card. So they should be mailed at the same time. They can be mailed in separate mailings. They changed the requirement when they released the Part 2 final guidance for the Medicare prescription payment plans. So they can be sent separately, but they have to be sent at the same time. The only exception to this is if all copays on the plan are zero. So your D-SNP beneficiaries who have all zero copays are not going to be receiving the program notice and form because they're not going to benefit from this program. The requirement is also for the carriers and the pharmacies to give likely to benefit notices. Now, the likely to benefit notices from the pharmacy would only be triggered by a single prescription fill of $600 or greater. The pharmacy would then be required to give that patient a paper likely to benefit form. There are standard model documents. All the pharmacy has to do is print out the documents and hand them to the beneficiary if they have that trigger fill, that's $600 or more. So enrollees are most likely to benefit, are going to have those high cost sharing earlier in the year. They're also going to potentially be receiving and should be receiving from the carrier a likely to benefit notice as well. And that is where the carrier evaluates prior year claims data. So they're doing it based on 2023 claims data to look at beneficiaries who would have hit the $2,000 out-of-pocket threshold or who would have had a single fill of a $600 or greater for a prescription. So they should also be sending out those likely to benefit notice on their own as well. So the beneficiaries who are truly likely to benefit, they may be receiving and are likely to be receiving multiple likely to benefit notices. At the pharmacy, if the beneficiary receives a likely to benefit notice from that $600 prescription fill, or if they're just in a state of not being able to afford their prescriptions. There is no point of sale opt-in option. They cannot say, hey, pharmacist, I would like to opt in now. I want to do this. I want to do the thing that it says on the paper. They can't do that. They have to call their carrier. They have to contact their carrier in order to opt in. The fastest way to do that is by picking up the phone and calling their carrier to get that opt-in completed. Um, if they get that notice, here's the process of what needs to happen. They need to leave that prescription at the pharmacy. Don't pay. Don't pay. It makes it a lot more complicated if they've already paid at the pharmacy counter. They need to leave it. They need to go home and call their Part D plan. They need to opt in. They need to wait for that confirmation. And then they need to go back to the pharmacy and pick up their prescription at the pharmacy counter. And then they'll be able to leave with zero copay at the pharmacy or zero cost at the pharmacy counter. They're still going to have their out-of-pocket responsibility. Again, it's just going to come to them in that billing statement from their carrier. But they're not going to have to pay at the pharmacy counter. If this happens for your client, what is happening that we are seeing is that the beneficiary, the Part D enrollee, is going back to the pharmacy to pick up their prescription, and it's still processing at the copay, and it's still telling them that they need to pay. If that happens, the pharmacist needs to be aware that they have to back that prescription out of the system because it's still going to try to process with that original process date, which is when they were not opted into the Medicare prescription payment plan. So the pharmacist is actually going to have to back all that out of the system completely, likely put that prescription on hold in like a hold pattern that they can do. And then they need to reprocess the prescription with the new date, the new pickup date, so that it catches that they're in the Medicare prescription payment plan. So if you've got a client that goes and they got a likely to benefit notice, but they already paid at the pharmacy counter because they urgently needed their prescription. They have to take this. The doctor said, you need to take this now. So they go and they pay at the pharmacy counter, but they say, I wanted to do this. I couldn't really afford this prescription. I can't carry this cost. I don't know what to do. So if that happens, the beneficiary has 72 hours to contact their Part D plan and opt into the Medicare prescription payment plan. When they do this, the plan is required to provide that client, that beneficiary, that member, however you'd like to refer to that, with a direct member reimbursement. So they have to send them a check to reimburse them for the prescription costs that they paid to the pharmacy over the counter. I know this gets a little crunchy. That's why it's important if they can leave it at the pharmacy counter and wait, that it is better. Because in a situation like this, if you've ever worked with trying to get a refund for an overpayment or something that was incorrectly billed with a carrier, you know that can take 6 to 8 weeks to get that check back. So the big concern is they pay, they call and opt into the M3P, the carrier is sending them the reimbursement check, and then they get the bill before they get the reimbursement check for their first month in the plan. So if possible, leaving the prescription at the pharmacy counter is the better course of action. So some important things to note that you make sure your client knows. The M3P does not save money. It does not save them money. Yes, it can make it more affordable for them as far as the payments are concerned, but it's not going to reduce what they actually owe for their out-of-pocket responsibility. It doesn't change how they move through the coverage phases. Yes, it kind of cloaks it because it does include the deductible phase. So it kind of disguises all of those different coverage phases, but it doesn't change the process. It also does not change what counts towards their troop. So if it's not an incurred cost, it's not counting towards their troop in any way, any differently. So it doesn't change or alter that. The enrollee can never, ever be billed more than their monthly maximum cap. That is it. That is all that they can be billed on a monthly basis. They can't have those fees added. They can't have penalties. They can't have interest. They can't have anything else added to this. They also have the option to pay more if they choose to do so, but they can never be required to do so. If they send in a payment and they have both a Part D, a PDP or MAPD premium, and then they also have an M3P bill, and they don't say which one it's for, it goes towards their Part D premium. It's going to go to their PDP or MAPD premium because that takes precedence. So if they send in an undetermined bill, if they don't write on it, that this is for their prescription payment plan balance or bill due, and they just send it into the carrier, it goes towards their premium payments. CMS does recommend prioritizing the plan premium payments over the M3P bill. If they are struggling to make payments, they recommend paying to their premium versus paying the M3P balance because they cannot be terminated from their Part D plan for not paying their M3P bill. They can be terminated from their plan for not paying their premium. So important to make sure that they know. If they fill an extended day supply, so if it's a 90 or 100-day supply, that entire cost share is counted in that month that they fill it. It's not spread out across those 3 months. It's counted towards that 1 month. Education, education. I am so, so big on this. I love education and making sure that beneficiaries understand and that agents are able to understand all of these different aspects. Educating your clients and making sure that they know that what this is that it's going to reduce the chances that they are misled, that they increase the chance that they benefit from this. So it gives less opportunity for another agent to potentially say, hey, have you heard about this payment plan thing that you could save money? All of these bad actors that do occur within the industry, the more we educate and arm our clients to be able to defend themselves, the less likely they are to fall victim to any of those schemes or scams. It also increases the chance that they come back to you and say, I remember this thing and I can't afford my prescription. What do I do? So with the Medicare prescription payment plan, this was part of the Part 2 final guidance. Outreach and education was supposed to be a really big thing that was placed on the carrier. They walked some of that back, unfortunately. There was supposed to be a lot of communication and education that happened with pharmacies and providers. We are seeing that most of that has not transpired, and even the carrier customer service representatives themselves are not well educated on this and are often very confused and have to be walked through by an agent. So the more that we can help those customer service reps through understanding and maybe talking to their supervisor and becoming aware, the less that will happen to the next people that come into their call queue. So education, education. When somebody opts in, if they're in the program and they say, I don't like this. I don't like not being able to pay. I don't like not being able to see what I owe immediately. I don't like this whole arrangement. I want out. What do I do? They can voluntarily opt out. It's called a voluntary termination. Yes, they can opt out. They are still going to receive a bill for their M3P balance until it equates to zero. Now, they can never be required again to pay that in full, even if they opt out of this plan. But they can choose to pay it off all at once if they want to. But they are still going to receive that monthly maximum cap bill until their balance is zero. There is also involuntary termination. Now, if they fail to pay, this happens if they are terminated after a 60-day grace period. So very similarly to non-payment of Part D premiums, they are terminated after that 60-day grace period. They are given notice. They are sent mailings, so they know that they're going to be terminated from the Medicare prescription payment plan. Now, similar to termination from their Part D plan, they can request reinstatement within a reasonable time if they can show good cause for why they didn't pay, and then they can repay the defaulted amounts. So there is that option. They have the opportunity and option to pay off a balance in full if they want to, but they can never be required to do so, even if they've defaulted, even if they've been terminated. They're still going to just continue to receive that monthly maximum cap bill until the end of the year. If they do pay off their balance and it's zero, the plan actually has to open up the ability for them to re-opt into the plan, the M3P, if they wish to do so. So they have to do that immediately if they paid off that balance. So what happens if they don't pay, if they just continue to not pay? They are just sent that monthly maximum cap bill until the balance is zero or December the 31st, because it's January to December billing cycle for this. Again, during that process, late fees can't be added. NFT charges, nothing can be added to this balance. If there is any debt collection, it has to follow state and federal laws. And this includes if a beneficiary passes away and they have an M3P balance, they are going to attempt to bill the estate. They're going to attempt to bill them. If they can't collect, it's written off as plan losses. Um, Now, an important thing to note is that a final rule was passed, put through as of January the 7th of this year. It was filed in the Federal Register on January the 14th. So it is one of those final rules that is still slated to go into effect. March 17th of 2025, medical debts can no longer impact credit scores. Um, this is an important thing because even if they default on their M3P balance, it can't be put towards their credit score. So that's, important thing to note. Now, we don't want to encourage them not to pay their balance because it's still important for them to continue paying if at all possible, but it won't harm their credit if they do get into a situation where they can't afford to pay their M3P balance. They just won't be allowed to participate again in that M3P with that carrier that they've defaulted with. So Part D plan sponsors cannot terminate the MAPD or PD plan for non-payment of their premium or non-payment of the M3P bill if they are paying their plan premium. So they can't be terminated from their plan. They also cannot deny enrollment into an MAPD or PDP plan if they have defaulted on an M3P balance with that carrier. They can't tell them, no, you can't be a part of this plan. They have to accept their enrollment. They also cannot reject a Part D enrollee's opt-in request to the M3P balance unless they've defaulted with that carrier. That includes the parent company. So if they've defaulted with a parent company, so if you've got Elevance and you've got different carriers involved in different plans, if they defaulted with any one of their plans, they can say, no, you can't participate with us in the M3P. But if they are moving from one carrier to another that is not part of the same parent organization, the new carrier cannot deny them the ability to opt into the M3P. They also cannot deny them coverage of future prescriptions if they default on the M3P. So just important to know, I did hear that stated at one point in a panel, and I want to make sure that that's super clear. The carrier, the Part D plan, cannot deny coverage of prescriptions if someone defaults on their M3P balance. So what happens to that defaulted balance? At the end of the year, any unpaid balances are written off as plan losses, and then they are factored into the bid for the following calendar year. So this all goes back to factoring into the bid, estimating losses, all of those types of things, and it impacts their funding from CMS. The one exception with that is EGWP plans. They don't file bids, and EGWP plans actually went to bat with CMS and begged for a waiver from the M3P because of this risk exposure, because they don't file bids. So the only way for them to recoup any costs is to increase costs for everybody. So it's really a challenging scenario for that space. Now, if the plan is compensated in any way, they can't write those unpaid balances off as plan losses, and they cannot factor those into the bid. So that's an important distinction. They are not likely to be selling this debt to a debt collector, especially in light of that new final rule that goes into effect, where the balances and bills for medical bills cannot be reported to credit reports. So there's not an impact there. So highly unlikely for any of that to transpire. I know there's been some concern around that. So just highly, highly, highly unlikely. Now we're going to get into how the actual monthly bills are calculated. So the first month is calculated differently than all of the subsequent months. That first month is calculated based on the annual out-of-pocket threshold, which will change for 2026 in the Part D redesign and in all of the new information coming out for 26. It's supposed to be $2,100. So for 2025, it's $2,000. So it's that annual out-of-pocket threshold filled minus any prescription costs that they've already paid out of their pocket that count towards their troop. So if they're opting in February, it's going to be different than if they opted in January. So they may have paid something at the pharmacy counter already. That is subtracted from the troop and then divided by the number of months remaining in the calendar year. That's why you see the calculations will vary significantly throughout the calendar year. Now, for all subsequent months after that first month that they've opted in, the bills are calculated by the actual remaining balance due plus any new costs during that month divided by the number of months remaining in the year. So I know it looks confusing on a lot of the sheets, but once you kind of understand the formula and how it works, it's actually pretty simple. I created some examples of how this works throughout the year and the process, who this program would really benefit and how it would look for them. So if we look at somebody that is on, for instance, a zero premium HMO MAPD plan that takes mostly generic prescriptions, they've got a zero deductible and tiered cost sharing. And then this is what they're looking at paying for their out-of-pocket responsibility on their prescriptions based on their plan copays and the actual out-of-pocket cost of the prescriptions. So he's got relatively low costs and he's getting his prescriptions filled on a monthly basis. This is what his prescription costs would look like if he opted into the Medicare prescription payment plan. So you could see that on that red graph line. The Medicare prescription payment plan is really going to be detrimental for him. It's not going to be a good thing because it's going to falsely deflate his costs at the beginning of the year and then backload them at the end of the year so that his costs end up heavier at the end of the year, exactly when we don't want someone's cost to suddenly rise. Inversely, someone like Miss Jones, who's taking high cost drugs, filling them in a 90-day supply, she's getting them filled early in the year. She's got a standalone PDP plan. She's got a $35.90 monthly premium, a $590 deductible, and a tiered cost sharing benefit. You can see her costs are very hefty at the front of the year. So she's going to experience that initial, oh my goodness, when she goes to the pharmacy to get her prescriptions filled. For Miss Jones, you can see what her costs look like. She's going to have spikes throughout the year. She's going to have that initial onset of like, oh Lord, when she goes to the pharmacy to fill her prescriptions in January, and then less cost and then spikes throughout when she fills her prescriptions. Whereas if she joined the Medicare prescription payment plan, you can see that green line, how it actually does smooth out her costs throughout the year to make them relatively manageable and even keeled throughout the year so that she's not seeing these mass fluctuations or large out of pocket all of a sudden, that she's not trying to put those prescriptions onto a credit card and then have high interest rates and fees and pay for those throughout the year. The Medicare prescription payment plan is really a significant benefit to someone like Miss Jones. Now, I must say too, these are all actual prescription drug lists that were taken. None of the information is correct or aligned. These are all pseudonyms for the people, but these are actual drug lists of beneficiaries that I took that demonstrate how this plays out for them. Now we've got someone like Miss Darcy, and this was a big misnomer, I feel like, this year, because one of the disqualifiers or not likely to benefit scenarios for people was someone who has LIS. Now, if they're paying on a monthly basis and they are going to get their drugs every month at the pharmacy, that is completely true. It will cause that nasty graph line to shoot up for their prescription costs. It's not really a good scenario for them. However, if someone like Miss Darcy is filling her prescriptions, and forgive me, yes, I did calculate this based on 2024's LIS cost shares because I didn't have the new rates at the time. So all of her cost shares, if she's getting her prescriptions filled in a 90-day supply, she is going to actually have reasonably manageable costs spread throughout the year. So it really is dependent upon her situation and what's going to be the best case scenario for her. Does she just want to pay the $20.20 based on last year's cost shares each time she goes to the pharmacy? when she goes to fill her prescriptions? Or does she really, would she benefit from having those spread out more throughout the year into kind of like a tiered graduated increase throughout the year? So it really depends on what someone's situation is and what's going to best suit their needs, but it could potentially benefit someone who's on LIS and getting their prescriptions filled in an extended day supply. Now, for anyone who isn't aware, LIS cost shares apply regardless of the day supply filled. So if a beneficiary is filling their prescriptions for 30 days or they're filling them for 100 days, it's the same dollar amount for either. So if they're going to go get a brand name prescription filled in 2025 and they have LIS and they don't have zero cost share structure availability on their plan, and this is going to factor a lot more for next year if the what is called the VBID model that allows for carriers to have zero cost shares applied for their LIS beneficiaries. If that ends as it is slated to at the end of 2025, this is going to have strong implications in 2026. But they can fill those prescriptions and it's the same. So that's a huge thing to also discuss with your clients as well. Are you making the most out of your benefits? Are you getting your prescriptions filled in a 90 to 100-day supply if the doctor, of course, recommends and approves that? If she's filling those in a 30-day supply, she's paying a lot more for the year for the same exact drugs, for the same exact amount of drugs. So you see $242, of course, last year's cost, versus 80. Same drugs, same amount of drugs. That's a huge difference for somebody who is on a very limited or low income. But if she's doing it this way, it's not going to benefit her because it's going to shoot those costs up towards the end of the year. So this is just to give you that cost comparison between what they pay filling 30-day versus 90-day supply. This is an example that CMS actually provided in the Medicare Prescription Payment Plan Part 1 final guidance. And this is an example for someone who is opted in April. So later in the year opt-in, that's why you're seeing $220.89 for that first month. And that's based on that formula that we talked about earlier, where it takes the out-of-pocket threshold minus what they've already spent, so the $12 divided by the number of months remaining in the year. And that is what puts their cost for that first month at $220.89. And then you see that massive drop the next month because it's only based on what they owe plus the new cost for the month divided by the number of months remaining in the year. All right. So if anybody has any questions on that, please let me know. I know we've only got 7 minutes left, so I am trying to move a little quickly just to make sure we get all this information to you guys. So for mid-year plan changes, moving from one carrier to another, if they are doing that and they have a default on their Medicare prescription payment plan balance, the new carrier cannot deny them the ability to opt back into the Medicare prescription payment plan through them as long as it's not part of the same parent organization for that carrier. If they are moving from the same plan to another within the same carrier or parent company, they can say, you've defaulted on your Medicare prescription payment plan balance. You cannot opt back in with us. We're not going to allow it. So they can have a denial issued for that. Here is an important point. If they are moving from one plan to another, or whether it is within the same carrier or a new carrier, at any point, they will be involuntarily terminated from the Medicare prescription payment plan on that first plan, even if they are current on their balance due. Even if they're paying every month, they are terminated from the Medicare prescription payment plan as soon as that plan ends. So when they opt into or join, when they enroll into their new plan, so if they're moving from an HMO to a PPO within the same carrier, they are actually going to have to re-elect to opt in to the Medicare prescription payment plan all over again. They will have their first monthly maximum cap recalculated when they opt in again. And they could get 2 separate bills. So you can have a beneficiary who is receiving two, three, four bills, depending upon their circumstance and what's transpired throughout the year. It can happen. It could happen, I should say. I do see a question. Oops, 7 minutes left. Yep. All right. So when they opt in, the carrier has the requirement to process those claims for electronic claims within 14 days and 30 days for paper claims. Same as all of their other Part D claims that are processed, but now even their out-of-pocket responsibility that they would have paid at that pharmacy counter goes into the claims payment processing system, which is a challenge for the pharmacies because they're going to have to float that cost. So it's going to cause some financial disruption for them, as does that $2,000 troop, and then people potentially only paying $400 out of their own pocket because of the EA versus defined standard as well. So it's putting a crunch onto pharmacies, especially those local retail pharmacies, those independent pharmacies. It's definitely putting a hurting on them. So making sure you're talking with them, you have good relationships, that you're supporting your community partners, your independent pharmacies, because they're critical to having a healthy community and healthy environment. This is the process. I'm not going to go through every step of this, but there is a bank ID number, bank identification number, and a processor control number for the Medicare prescription payment plan in and of itself, separate from the Part D's actual BEN and PCN. Every carrier has their own Medicare prescription payment plan, BEN PCN, and all of those PCN, those processor control numbers, start with MPPP. So the pharmacy is going to be much more aware of it with MPPP. So they're going to hear that a lot more often. That is the last thing that's processed in all this coordination of benefits. So key takeaways as we sail into the last few minutes of the webinar. Key takeaways. Those Part D enrollees with the high drug costs at the front of the year are going to be the ones to benefit for the most. They're going to see that smoothing of their costs throughout the year. Or those who have prescription drug costs that they're struggling to afford and say, I can't afford that. This may be a solution for them to make it more affordable. Granted, it's not going to lower their costs for the whole year. It just might make it a more payable option for them. Retail agents, super important to be really queued up and educated on this program so that you can be that resource. You can be that subject matter expert and bridge this gap for pharmacies and beneficiaries. Beneficiaries who have that stable cost, they're not really going to benefit from this. It's actually going to create like almost like a balloon mortgage you saw in that chart, where it's going to shoot their costs up during the worst months of the year, November and December, could cause a risk for more defaults. The more defaults that happen, the more challenges the carrier is going to experience because it's going to be more cost burden on them. And we know what happens when that transpires. We're going to see, higher costs, less benefits, more challenging circumstances for beneficiaries. Super important. There's no statutory requirement for pharmacists to provide financial information to Part D enrollees that have opted into the Medicare prescription payment plan. What does that mean? It means that most of the time the beneficiary is not going to know what their prescription cost is until they get the bill in the mail, because the pharmacist is going to see zero on their screen, hand the package to, hand the prescriptions to their patient, and off and away they go home without knowing what their actual out-of-pocket responsibility is for that prescription. Beneficiaries are being advised to call their plan in order to know what their costs are before they go to the pharmacy counter. So CMS is aware. They're trying to put some measures in for 2026 to make it more obvious and make it a requirement for pharmacists to know what the actual out-of-pocket responsibility is. But for this year, that is going to be a crunchy point. So your clients need you. They need you this year big time, because there's a lot of confusion. There's a lot of gaps in knowledge. There's a lot of challenges. So what can you do? Get out there, get involved, educate providers, pharmacists, patient assistance program, home health providers, long-term care providers, community centers of influence. Do Medicare prescription payment plan education presentations. You can use our IRA playbook. We have one out there for you. You don't have to log in to download anything. It's available to the masses, completely free, no cost. Just use it, get that information out. There's forms on there you can actually hand to your client to advise them of all of the potential challenges in the Medicare prescription payment plan, but also the benefits. Advocate, get involved, join NABIP, voice concerns, be a part of the change that you want to see in the industry. Make it happen, because we can if we all collectively get involved and have a unified voice on all of these different topics that are really impacting are beneficiaries. That is all. All right. Thank you guys so much. I know we're right at time. No, they can't really opt out of participating. It's a legal requirement for them to pay. But I will say we have had pharmacies that are saying if the beneficiary opts into the payment plan, they are going to discharge them as a patient and tell them that they cannot support to float those prescriptions. So we have had very small pharmacies that know that they can't support that. They don't have the finances to float those because a lot of times the out-of-pocket responsibilities are what they use to pay for pill bottles, to buy their labels, to buy the bags, to run their business on a daily basis. So that's a challenge for them. Can someone use their Direct Express debit card? I'm not familiar with the Express debit card. Are you, Amanda?
I am not. Usually that has to go, it's a bill that it's a separate bill that they get, and each carrier is going to be different with how they do it. So, yeah.
Okay. They can pay through ACH transaction for their M3P bill. So they can set up auto payment for that. So if they have a debit card that has like a credit card logo, Visa, MasterCard logo, they could use that to pay their M3P bill. Absolutely. All right. Well, if you guys do have any additional questions, please don't hesitate to SSI recipients receive their benefits with direct extent. Oh, direct. Oh, I see. Does that have a Visa logo on it? I thought it had a Visa logo on that. I didn't even make the connection to what that was initially.
Good to know. Awesome. Well, I appreciate the information. Thank you, Samantha, for going ahead and doing the training. Is there training available for agents to show clients? I know that there's some training that is on the CMS website that you can go ahead and you can use when it comes to that. I am going to go ahead and post this training up on YouTube. It will probably take me a couple of days to get it loaded in, but it will be there. And thank you, Sam, for going ahead and doing it. It was super informative. And guys, I hope you have a great weekend, and I will talk with y'all soon. So thank you. Have a good
Thank
one.
you. Appreciate it, Amanda. Appreciate you very much.
Anytime. Great job.
Thank you.